Hi and welcome to this video. Today we'll be having a quick look at how we put a strategy into our Traders Journal. This is after you've got the information you require. If you're not entirely sure how to get hold of the information you're after or how to create your strategy from scratch, there is a PDF that is free that's available on the members side of Traders Journal, and that goes through back testing and how that works and different types of back testing. So jump on there and download that. Equally, if you want to know a bit more about how you create a strategy from scratch, or how you back test that strategy thoroughly and produce those results that then get put into Traders Journal, there is actually a short course that we've put together on that. Very affordable. I hope you'll agree. There's also a discount for Traders Journal members. So if that is something that's of interest, there is a short video on this part of our website. But equally, if you wanted to look into the course or download the PDF, please be our guest. So first of all, what we're going to do, we're going to log in quickly to our Traders Journal. There we go. Okay, so you can see this is the Traders Journal dashboard. This is all of the various bits and pieces, some of the existing strategies I've put in, some of the results. All of this is covered in more detail in the some of the other videos that show you around the platform. So today what we're focusing on is putting data into a new strategy. So we're going to just click on strategies. You can see here some of the strategies that have already been put into my platform, and we want to create a new one. So it's very straightforward. Either you can click here, put the strategy name in here, test 2017, creation date in here, etc., etc., or you can click here, create new strategy. So it'll ask you a series of questions before we need to start putting the data in, and they're about what type of strategy it is. Again, there's more details on this in one of our other videos about backtesting, and we go into a lot more data in our short course about how to devise your own strategy from scratch, and then how to thoroughly backtest it so that you've got all the information you need to put into this tool to make sure that you remain one step ahead of the markets. So for the purposes of this, the strategy, relatively basic moving average based strategy that I've done 6 months worth of backtesting that we're going to put into this now today, is a trend following strategy. So we're going to go to the drop down. We've got all of these selections. We're going to select the trend. Just very quickly, what all of these different types of strategy are, for those of you that aren't sure. Trend, that very much means going with the trend, so something that works in line with the larger direction of the market and tries to profit off the ongoing trend. A breakout, that would be a trade that is based on a consolidating market, or a market that is caught between two price levels or two structures in a channel or some form of structure, and you're trading when it breaks out, so when it leaves that structure or when it leaves that range. Mean reversion. Mean reversion is where the price has moved fiercely, violently, and quickly away from a standard, a mean level, so a moving average or something similar, and you actually want to profit from it returning to that average, to that mean level. So often they're against the trend, those particular trades. Momentum, based very much on changes in momentum. It might be divergence of a certain indicator, or spikes of momentum, or some of the candlestick patterns that are used in trading might also fall into momentum. Gap trades are just a type of trade more often used with stocks and indices, markets that open and close and have the potential of gapping, so having no candles between one price and another. There are several ways of trading gaps, but it is a type of strategy. And finally, one that I recommend most people avoid, but nevertheless, it's an option if you're out there and you're testing these strategies, would be news. So fundamentals, economic results, trading results, financial year results, etc., etc. If you are testing or have tested something based on fundamental news, then that would be the type of strategy you'd be looking at. So as I said earlier, ours is a trend strategy, and in our case, we've tested it using Forex, FX pairs. Again, when you're inputting a strategy here, it's important that you use the specifics that you have tested. Now, I stress that because the way that Traders Journal works is that it compares live market performance with historic performance as per your strategy results. If you have strategy results in a certain type of commodity, currency, in a certain market with a certain type of trend or pattern to it, it is important you're aware of that when you're comparing it to forward-looking results. If you've tested pound dollar and then you're trading live FTSE 100, then you cannot expect to see a correlation between your results. People often say that certain strategies work across all time frames, across all instruments. I generally find that to be untrue. It may be successful across most time frames and most instruments, but there are some that it performs far, far better than others. And my question to you is, wouldn't you be better off knowing the instrument it performed the best in and then trading those, rather than taking a chance and trading it on whatever you happen to find? So this gives you the ability to test maybe 5 different Forex pairs, indices, whatever, oil, gold, whatever you want to trade. And then once you've back tested all of those, you will find a pattern, you will find your preferred commodity or pair to trade, and that's what we're putting into here. So we're putting in the exact details of what we've traded, what we've tested rather. So Forex, we've tested Euro, Japanese yen, duration. Now finally, duration. This is how long does an average trade last? Are we looking at open and close in the same day, a day trade? Are we looking at an intraday trade, so within the week? A swing trade, which is, it says 5 to 20 days, 3 days plus, I would say, or position trade. By that I mean it almost is verging on investing. A position trade is more than 20 days, 20 working days, it's about a month. So we're looking at things where you're buying and holding fundamentally. Now, for this particular test, some of them will be within 1 day, but generally the principle is probably 1 to 5 days, so intraday trading. So once we've explained what type of strategy it is, we then need to go into here and start putting some of our data in. So this is where it gets a bit fun. Right, so here we are. I've changed the setup slightly on the screen. You can see now that on the left-hand side of the screen, you can see my Forex Tester 3 window. Shrunk it down just so that we can see what we need. On the right-hand side, still got my my page creation, my strategy creation page open. So all the information that I'm going to need to put in here has been spat out of my Forex Tester down here. So what I have done with Forex Tester is I have gone through the charts, I've entered all of the trades that conform to my rules and regulations, and this then has given me the results of that over a 6-month period. You can see up here, months processed, 6 months. So it's only a short period, and it's only one instrument. I've done it on Euro Yen, you can see up here. I've actually used 2 charts, the 4-hour, and I can just make it a bit bigger for a moment. 4-hour and 15-minute. Again, one of the real plus points of the Forex Tester software, you can have multiple time frames, multiple charts, and you can take part in an element of discretionary trading. But anyway, more details about that in all of the back testing information you can get from us, either the PDF or the course that I mentioned earlier. So let's get some of this information put in here. Total trades sampled. So what we want to do is come over here, total trades, 19. So very straightforward, 19 trades. Sample duration in months, back up here. Months processed 6. You'll see here that in the journal, it gives us an average trades per week, average trades per month, average trades per day. This isn't designed to go down to decimal points. This really is only for guidance. The idea is that over time it will show you whether more or fewer trades are setting up. Now, more trades might feel like good news because you're going to make more money, but that is rarely the case. What actually it means is if there are more or fewer trades being set up on exactly the currency pair that you've tested, the market may well be changing. It may be changing for the better, may not. But it is important just to go back, take a look at the market, take a look at some higher time frames, see what the structure of the market looks like, and see how similar or dissimilar that looks to the period of time that you tested. Again, more information about that in our backtesting information. So, total successful trades. Now here, this will always be the full number of trades, 19, because in terms of Trader's Journal, which is mentioned in a couple of other videos, a successful trade is one where you follow your plan. Doesn't mean it makes money, it just means you've followed your plan. So whatever your strategy is, whatever your plan is, if you've done it, and you've done it properly, and you've not interfered with stops, or pulled out too early, or got scared, or whatever it is, then it was successful. For the sake of testing, we obviously follow our plan. So total successful trades, and you'll see it in here 100%. So 100% successful trades. Profitability. So total profitable trades. So we come back over here to the left. Profit trades are 8. So profitable trades are 8, and the total profit in pounds. Now then, we need to come down here to gross profit, because gross profit is our total profit, and then gross loss is our total loss. And above them you can see net profit. So that's our net profit. That's what we end up with at the end of 6 months. For the purpose of this particular strategy, it was a £10,000 account using 1%. So based on, if we multiply that by 2, we'd be looking at about a 30% return annually using this strategy. But this is, as I say, this is one strategy. This is a short period of time, and I'm not here to sell you a strategy or to tell you it works or doesn't work. All I've done is test it, and I'm now putting into Trader's Journal exactly what the results are. So, gross profit 2808.84. Total loss, so back over here. Gross loss we want, which is 1399.29. Lovely. Now you'll see it gives you a percentage profitable trades. Now, there are different types of trades in existence. Some trades will have higher profitability rates, by which I mean 70-80% of trades will be winners. Others will have lower. This has under 50%, which means less than half of the trades in this strategy will win. Now, that doesn't necessarily matter as long as the winners are bigger than the losers. For example, with we'll have a look at it a bit later on as we put it into this the trade journal, but this uses a 3-to-1 reward to risk. So a winner is 3 times what a loser is. So you can see that at 42% and 3-to-1 in terms of profitability to loss, then that's got the makings of a pretty profitable strategy, as the backtesting seems to suggest. You'll notice also, just going back up quickly, as these are filled in and filled in correctly, you'll see they go green. Relatively minor point, but something that's worth remembering. So it just ticks it off basically as you go through. Account starting balance. So I just mentioned we started with 10,000. and I risked 1% per trade. The total profit or loss, now that is our net profit. So that is our difference between profit and loss. 1,409.55. Okay, so down here we've got a couple of really interesting calculations actually. Profit and loss as a percentage of the account. So 6 months we've made 14.1% profit. As I said, that means over 12 months, 28%, not quite 30% as I suggested, but so that's 28.2% per year based on this backtesting. That's what we're expecting. So when we start live trading, that's what we are expecting if our testing has been accurate. If that doesn't transpire to be the case, then we need to review the current market and our tested period. We need to start identifying problems or differences before we start losing significant amounts of money. Risk reward, again, this comes down to the average risk reward. So this gives us a risk reward of the total 6 months of 3.51 to 1. So I was wrong, it's actually working out at nearly 3.5 to 1 reward to risk. So again, when you're only winning 42%, but you're making 3.5 times, that's pretty good news, and that's some great building blocks for a strategy without a doubt. Now then, runs. Runs are consecutive wins and losses. So again, back over to this brilliant piece of Forex Tester software, and we're looking at maximum consecutive wins, which there we are. Profit trade cons. So that's consecutive profit trades. So 2 wins, 3 losses. 2, 3. Now then, why does this matter? This matters because one of the hardest things to do in trading is to deal with the losers or the winners when they start to pile up. When you have 3 consecutive losers at 1% each, 1% in this case is £100 in this account, you're £300 down, 3 trades. One of the hardest things you have to do is place the 4th trade. The same with consecutive wins. If you're winning 2, 3, 4, 5 in a row, then it is very difficult to control your lot size, to ensure your stops are rigid, and to stick to your plan, because you will believe that you are completely invincible. Now, what this does is it gives you an idea that this strategy you would expect this strategy to produce a maximum of 3 consecutive losses or 2 consecutive wins. If you get a 4th consecutive loss, if you get a 5th consecutive loss, then something might have changed. So again, it's back to that case of checking the market, looking at what's going on, looking at how the strategy works, and seeing if something has changed and whether that will impact the profitability of this strategy. We've back tested, but it doesn't mean anything going forwards unless you monitor it closely. And when you see that it is changing, the results that you are relying on to make you money have started to diverge from the current markets, that's the point at which you need to review your testing and review the current market. So this is why these numbers matter. Maximum drawdown. So maximum drawdown, we're back over here. Maximum drawdown down here. Max drawdown 492.41. Again, I mean, this number looks terribly simplistic because we started off with a £10,000 account, so it's a very nice round number. However, if you're starting with a different size account and it's a different number, it's slightly more complicated. But the maximum drawdown is from a high to a low, the most money that you are down at any one point. So £492.41. So those 3 consecutive losses would have generated that drawdown, and as a percentage of account, the maximum drawdown is 4.9%, so just under 5%. Again, this is key because it gives you some level of expectation when you are coming up against consecutive losers, when your account is starting to drain. this is saying that, look, if you're up to 500 quid down, then that is normal. That is what happens with this strategy. This is designed to give you the confidence to continue following this strategy in the first instance, but also if it breaks that level, if it becomes 600 down, 700 down, that is the point at which you notice there is a significant problem and you need to address it. Just quickly, while I'm here, you can see that as I hover the cursor over some of these lines, it gives you just a little box to tell you exactly what things are and what information goes in each box. Probably would have been more interesting than listening to me waffle on. Finally, the last few bits of creating a strategy. We're down at the bottom here. These are all automated. So this is the P&L for the strategy you have tested based on your results that you've input so far. The total profit and loss, we can see here, 1,409.55. The average profit and loss per month, useful. This gives you an idea what money you are likely to make or lose on a monthly basis based on this trading strategy. Too many people have a £10,000 account, go out there and trade trying to make 5-10% a month. £234.92 is the average of what you can expect to make with £10,000. Sounds really undramatic, that's a real word, but the point is, this is real life, and this is what it's important to have as a target to try and achieve, and be rightly chuffed when you do, and not feel like you're dealing with peanuts and wasting your time. Average P&L per week and per day. Different people use different benchmarks to help them in their performance, and this is really simple. This is really breaking it down. This is clear. So you need to make £7.83 a day on average to hit the numbers we've just looked at. Okay, we're done. Create. Hit the create button. Here we go. We're in. We've got our new strategy. There's some little buttons up here. Should you want to muck about with the details or send them to someone, or you can export it here to a CSV file. You can update it if you've got something wrong, need to change something, just click here. Equally, if you're done and strategy doesn't work anymore, you stop using it, the market's changed, you can delete it just here. So if we go to strategies now, there we go. You see the latest one down there at the bottom. Test 2017 trend, tested it on Forex, so it gives you an idea exactly what it is. So that's just an introduction. Apologies, I've waffled on a little bit. That's just an introduction to exactly what you need to do, the process you need to follow to input your strategy into the Traders Journal. Hope that was useful. If you've got any questions on this or any of the other videos, feel free to email me at tom@TradersJournal.net. Thanks.